Hi folks, welcome back. Just real quick, today is the 10th, so by tomorrow afternoon I will be removing those individuals that have not made their payment on time, so it is what it is. I have to add that to you guys while you have your full attention. And I received in the past emails, Michael, can you just get on with it? But it's a business, so I have to do things like a business, and I have to let you know when things are needed, when they're not needed. I don't need to talk about it, but we have sent out an email tonight, so please don't send me an email unless it pertains to you. So if you get canceled and your access is denied after tomorrow and you feel you've made your payment on time, just email me at innercircletrader@gmail.com. Not a problem. We'll work with you to get it restored as soon as possible. There's about 82 of you, and there's simply no time for me to go through and disconnect. I give you guys a lot of grace period up to the 10th, and it's 6:34 p.m. my local time, so usually I cut off at 5 p.m. and it's usually about a dozen of you that either don't make your payment on time, forget it, whatever, and you end up correcting it overnight or the very next day, and it's restored. 82 of you, it's just too many for me to process right now that late in the day. So I'll have my help tomorrow work with me to get all that taken care of. If you are leaving, this is the last mentorship video for you. Then wish you well. Good luck, good trading. And if you just completely forgot, get your act together. All right, so here's the dollar index. We have remained in this consolidation. It is so boring. I know some of you you want to get in here and you want to do position trades and long-term trades. I don't have a long-term horizon right now because we're stuck in this range. So I don't know. So that's why you see me day trading. The seasonality and the tendency for the dollar to drop, it can it happen? I guess it could. I mean, it looks as if it went up there, filled in this imbalance. Last couple days we went lower. FOMC behind us. It's not that big of a deal. We had ECB come out today. You saw me capture some of that. The bias I was looking for dollar index, I wanted to see it trade a little bit higher. I didn't do it so much today. We had on weakness here, and just a little bit of a pop on the dollar intraday here. That was all it was required for me to get my shorts on euro and cable. That was the focus for me this week, and some of the things that leads to consistency is this waiting and looking for your side of the market. We're still in a large range here for the dollar index, so from a prognostic standpoint, I don't have a very definitive it's going to go here. Where you've seen me in the past do that, and I felt very confident in telling you this is what we're focusing on. At this very moment, I don't know. I don't know, and it needs to move and create some kind of a displacement on the daily chart, because as it is right now, honestly, it can go either way. This could have easily just simply been a run below this short-term low here for stops, and then it can just start to move and grind higher and take out the equal highs here and move into that weekly imbalance that we've been talking about for months. Or it could just slowly drift sideways and do absolutely nothing. And that's kind of what I think. My gut's telling me that's what's going to happen. Because for whatever reason, there's a lot of contraction taking place. And while I'm on the daily, on the dollar, I'm just going to breeze through real quick. Not that I'm going to do full analysis, but here's the gold market. We're in a consolidation there. Here's NASDAQ. Not NASDAQ. New Zealand dollar. It's in a large consolidation too. It's doing absolutely nothing. Australian dollar, doing absolutely nothing. It's in a large consolidation. Dollar CAD, consolidating as well, doing absolutely nothing. Cable, it's a mess. We'll get into that when we talk about it. And then here is euro dollar. Okay, so across all of the currencies, it simply isn't anything to really bring to the forefront. Say, okay, this is where the next big move is going to take place. And that is unfortunate because sometimes it's going to happen. It's going to happen long past when you're listening to me and you're doing this all on your own. You're going to encounter these environments. So when it's like this, you have to be a scalper or a day trader. Like it or not, that's just the way it is. Now, you can try to be a swing trader, but you're probably going to get chopped up, stopped out, and it's going to be very frustrating. So unless you're willing to shift your mindset from whatever it is you want to do from a larger time frame or higher time frame model, then you're going to struggle if you don't want to do it. In other words, dropping down into intraday. Okay. So if you don't like doing that, these are periods when you just simply sit on your hands and don't do anything. And it takes a lot of confidence to know that eventually it'll turn around and start moving around. And that's what we need. It may be like this entire year. And I hate to sound like a buzzkill, but it certainly feels like we're going to spend some time in ranges like this. So I can't control price, obviously. I can't make it do what I want it to do, and I have to submit to it just as well as you do. So if we stay in this long-term consolidation on the daily chart, just know that there's still opportunities. You see that happening intraday, but if it doesn't fit your lifestyle or it doesn't fit your personality, it just simply means you're going to have to stay on the sidelines for a longer period of time. And that may force you to not want to be here in a mentorship. It may force you to say, I'm not really made out to be a trader. And you know what? It's probably true. And that's okay. There's nothing wrong with that. If you come to that conclusion, don't let me twist your arm to be here. Don't let me twist your arm to stay in the marketplace. Don't even consider it twice. Okay. If you come to that realization, then you found something that, makes it or breaks it for you. Because there's always going to be periods like this where we go into consolidation. So if you can't have patience and control yourself, you will blow your accounts doing stupid things, trying to do things that aren't going to work out for you. Okay. So let's drive on over to, let me talk a little bit about what is important to me going forward for the dollar index. Now, I'm not doing anything the rest of the week, but we have a small little volume imbalance in here, right there. And then below that, we have this down close candle, which is a bullish order block. If we trade down to that level, I would like to see dollar index fail to go any lower than this candle's open at 96.14. Let's call it 96.15, 96.20 in that area. So if we lose 96.20, 96.15, we're probably going to make an attempt to get down here to this low. And that would support the bearish seasonal tendency going into May. Do I see it here? It could do it. It could. But I don't have that strong conviction to say, okay, let's focus here. Because we've been back and forth whipsawed. Directional bias has been changing each week. I'm finding setups, but again, it's only on a scalping and intraday basis. But for like one shot, one kill, I'm not finding that. Okay, like for instance, like trading the weekly range, I'm having difficulties doing that personally. So that's why I'm doing all these Jack be nimble, Jack be quick, jumping over the candlesticks intraday. So if we go down to this low here, I'd like to see it support that. If it goes through that, again, that's the level I'd be expecting to see liquidity ran out on. We'd have to go above these highs in here in a meaningful manner to see any attempt to get above these equal highs and run for that weekly inefficiency that we've mentioned in the past. Gun to my head, we're going sideways on the dollar. Euro dollar. All right, so this thing has, it may want to come up here and challenge this bearish order block. Might want to do that. I don't like the overall market structure that's here. I suspect that it still wants to get into those 110s. And I'm right now looking at the market has dipped lower, and then we tried to go lower. From an interest rate differential, there's really no reason to buy euro dollar. There's really no draw on liquidity that would be meaningful for euro. There's no fundamental strengths in the idea of buying the euro. there's simply no real interest in buying this currency pair. So I think if we get some kind of a wild snap higher, okay, maybe they'll do one more attempt to run out the highs here or run above this short-term high here and then ultimately fade that and go lower. I think we'll see 110s in 2019. I see that in the cards for Eurodollar, but trading it in here, it's been rather fickle. And it wasn't until we saw the ECB come out today that we saw real pure technicals. So volatility's there when it's needed, okay, but it's being really, really stingy with it otherwise. If we go into an hourly chart, you can see that this is the move we took part of today, but it only came right down into a bullish order block right here on the hourly. So I'm just going to use a horizontal line here. Drop that on there. So we have a bullish order block here, led to this run up, dropped all the way down into that. So what level is that? 112.30. That was the reason why I had my limit orders there on Twitter. You see the recordings. The last limit I had was a little too ambitious, and the spread wouldn't let me cover. So I had to cover at market. So let's drop into a 15-minute time frame. You see the high here and the high here. They were relative equal highs to me. Now, this is something for your notes. This is really important to know that I'm not in here trying to trade ahead of ECB rate announcements. I'm not in here trying to trade ahead of FOMC. But I am willing to step in after the initial run created by these events. Not so much with FOMC because it's so late in the day, but for rate announcements, it's during what time of the day? It's usually during a New York kill zone, or it's during a time of day where it permits more participation, and it has a little bit of battery left in the daily range. So on ECB, we opened up here on this candle. Let me drop down into a 5-minute chart because you can appreciate a little bit more. So we have relative equal highs here on a lower time frame, and I wanted to see it make an attempt to go higher and then fade. And that's what we saw happening. We opened on this candle, dropped down. So if we look back into this area here, on a 1-minute chart, that's what I used. If we drop into a 1 minute, it feels kind of strange talking about a 1 minute. Michael, what are you doing talking about a 1 minute chart? Let me scrub back here. There we are. So right in here, we have a breaker. This move led to the run up. So they ran all the stops here. And then the market broke down. All I did was went in right after the initial knee-jerk reaction. And I wanted to get in close proximity to that breaker. Okay, and then the other orders were optimal trade entry into a bearish order block and a fair value gap. Another optimal trade entry, mean threshold of the bearish order block. And just stop entries below here. If I see it break down lower, and right in here, I just did another stop order. So I don't want to be babysitting the positions because I think if it's going to go all the way down the order block, anywhere in here, once it starts to run because of the time of the day, it's going to do so in quick fashion. Okay, so for your notes, just know that if this price action was to form during a medium impact event, okay, on a calendar, or anything non-farm payroll, FOMC, or rate announcement, I'm going to wait. Okay, I'm going to wait to see what they run first. And then once it shows its hand to me, like it does here, it opens. That's just that's a stop run, and they start to break down. I can trust that they did this on a high. Now, if it's a medium impact event, okay, if it's not a rate announcement, if it's not FOMC, if it's not non-farm payroll, then I will sell it as it runs up there like that. That's when I'll sell it above and go right into that and stand right in front of it. But anything like a rate announcement, I want to see them tip their hand because I know I'm going to use the breaker to get in there. I don't need to worry about it. And if the market was to run away and not give me that breaker, okay, fine. I'm just going to get something down here when I get the first retracement because I know what the draw on liquidity is going to be. It's going to be that hourly bearish order block. Remember, the focus going into this week, all I cared about was going short. I waited for my setup. What was the context of this week? ECB was coming out, FOMC. That was the fireworks for the week. So Monday and Tuesday, we had to sit through lethargic, mundane, boring price action, doing hardly anything in Eurodollar until we had the show. So once that volatility came in, it's easy pickings then. I ain't got to worry about it. Down here, that order block, you can see beautiful, beautiful delivery of price. Now, I'm eating my heart out. Don't get me wrong. I wanted to buy this order block right there. When it came down in here, I wanted to buy that for a London close entry and try to get back up into the stops here. That would have been a nice run from this exit to an entry down in here. But it would have gone against what I tried to teach this week, which was focus on one side of the marketplace. And if you don't get your fill, guess what? You don't get your fill. If you don't get your trade, you don't get your setup, then you don't get it. We could have went this whole week and maybe nothing would have transpired. And it would have been a failure? No, it would have been a really great learning experience because you would have seen me stay on one side of the marketplace, look for a setup, and it didn't come. But just so happens that we knew that Wednesday was the fireworks display for volatility for this week. We knew it was going to be Eurodollar central because of the economic calendar. We knew what time it was going to occur. Okay, so I sent a tweet out today, and I actually kind of like it. I don't know where I get some of this stuff. It comes off the cuff, but I gave an analogy about it. The economic calendar is like a movie script. Okay, and the kill zone is the scene or the act in the play. Okay. And when we get into a kill zone, a time of day, that's when you need to know your lines. Now, it was a pun because you need to know your lines or your levels in the price, but you also need to know what your lines are. What are you supposed to be doing? What are you supposed to be saying as a trader relative to what you see in price? Am I buying or am I selling? Okay, so I felt that was kind of noteworthy. I like that one. So I put that in my journal myself today. I thought it was rather neat of an analogy that came off the top of my head, but it's really important that you understand that's how this works, because the economic calendar, there's no reason to consider looking at it unless you understand that that's when the volatility injections are going to occur. And if you understand the context of the market and the weekly range environment, you can still be wrong and still find setups. Perfect example this week. I was looking for a bullish dollar. We didn't see any bullishness on the dollar index except for intraday movement today. And if we look at that, let's drop back over here. I'm all over the place today, but I have so much work ahead of me tomorrow. I just want to be real relaxed and just go through it the way I want to go through it tonight. But this movement right here, this is all that was needed. That little pop up in here to justify shorts going into the ECB. That's it. That little run right there, that teeter-totter, that seesaw type effect, one thing goes down, other things go up. Well, dollar going up here allows for foreign currency to drop. Okay, no problem. That's what we see here. So I had my setup. I knew what I was looking for. I wanted to sell short. What was I waiting for? I was waiting for the fireworks, the volatility to inject movement or displacement in price. They popped it up here. Notice the openness up here. They sent price up here rapidly, really quick. That's not random. Come on, that's not random. That's designed. So when they open it there, everything floods the market for buy side. All these buy stops have been hit. The market's flooded with buy orders. Traders at the bank level and large institutions will have liquidity to pair up with selling short, all the way down to a clear, obvious 60-minute bullish order block. Beautiful delivery. Came all the way back. And right now we're just chopping sideways here. And it's just a total mess. Well, of course, it's a 1-minute chart during Asia, so who cares? If we go back out to a daily and zoom back in, I want to watch this level here, this low. at 112, we'll call it 112.90, because if it's going to go up, it could reach to 112.90, but we'll call it 112.85. Today's high is 86, I think. Yeah, the 112.86.5. So I want to see, are we able to crack through this right here? Or are we just going to slowly drift and go sideways some more? I don't personally know. It would bother me to say, I don't know, if you hadn't been seeing a long track record of me being able to tell you what is going to happen before it happens when the environments are better than we are right now. Admittedly, this is a very, very, very hard market right now. So if you're struggling, just find some solace in the fact that I'm working my ass off here too. So it's not that it's coming off easy. It's not. I got to work. I got to really find these setups and wait just as well as you do. But it doesn't stay like this. A couple of years ago, we had volatility contract like this as well. And it became like big news. Everybody was talking, oh, volatility is gone. There's no liquidity. There's this, and that. There's plenty of liquidity. There's lots of liquidity. The only thing that's happening right now is central banks are tightening, because what they want is they want sentiment to build up on one side of the marketplace. There isn't enough of it right now. If you look at what's been going on, the market's been consolidating for months, and nobody really knows what they want to do. Okay? So if that's the case for everyone, even on a larger scale institutional front, what's the central bank going to do? They're going to tighten it up. Small little ranges, small little movement. They want people to forget about it, not really think about the marketplace. And for institutions that have to be participating, they want to build sentiment up. They don't care what side of the marketplace they build sentiment on, but sentiment will build on a large scale from the institutional side. When that happens, and you can't rush this part of it, but this is what's actually going on behind the scenes. When that liquidity starts to build up and there's an imbalance of open float, too many buy orders, too many sell orders below the marketplace, okay, that will create the opportunity for displacement. Then and only then will the central bank's displaced price reprice it to that level of liquidity. And by doing so, it will create excitement all over again. And the pot will be stirred. And then we'll have volatility, we'll have swings, we'll have imbalances, and we'll have salad days again. Okay? Salad days are just an expression for like the easy days, easy time of trading. Okay? So right now, you have a choice. You either sit on your hands and don't do much and just study back old data and wait, or you day trade and practice like that. And there's no wrong answer there. Okay, I would like to see you practice, even in hindsight capacity, but you're going to do what you're going to do, right? But don't blame me if you don't learn it. So moving on over to cable. This pair, I got a note on my news wires today that there was supposed to be some kind of a emergency Brexit meeting held today, or later today, or whatever. I doubt very seriously anything's happening right now. I might be wrong. I'm not across the pond, but that I thought was, concerning, and that was the reason why I collapsed my shorts on cable. I wasn't comfortable holding for anything lower, and I'm glad, because it just went up against where I was holding. So you saw my exits on Twitter as well. From the daily chart, this thing is a mess. I like this liquidity pool here, this low and these lows in here. I think that they are unprobed. They're untapped. They're rich with sell-side liquidity. Even if this thing wants to pump higher and go up to the 133s or so, or 134s, I'm not saying that's the case, but say it wants to do that. Wouldn't it make more sense, because we're stuck in this consolidation, wouldn't it make sense for them to drop price down below here, absorb some of that sell-side liquidity to pair up long orders with? I mean, I would expect that. That would be reasonable. So we came up into relatively the bottom of this down closed candle, which will be 131.20. Yesterday's high comes in at 131.20, and then today's high comes just one pip below at 131.19. This bearish order block, it's on its last leg. Okay, so if it's going to drop, it needs to do so tonight and into tomorrow. If it does, I want to see these equal lows swept out and then make a run for this low here. Not just these equal lows. I think it would want to go below here. And then we have this fair value gap right over here, which would take us into this candle's high, which is 129.37. So we're going to say 129.40 to 129.35, reaching down a little bit. So that would be a scenario I would like to see happen. If we press on through this up close candle, then I don't know. Brexit's having some kind of effect on it, and central banks are working with that sentiment. I don't trust this daily chart. I don't trust it at all. I've been second guessing myself a lot with cable, even though you see me doing some things with it intraday relative to Twitter. I don't feel confident trading cable like I used to. And it's very hard for me to not second guess myself because of the Brexit stuff. And the way I'm combating that is I'm trying not to read every little bit that comes about Brexit, because I tried that and tried to discern and decipher what they're doing and what it means. It just made it harder for me. Okay, so what I've done is just stuck to price. And if the price isn't giving me a very clear indication of what it wants to do, then hey, I ain't worried about it. So on an hourly chart, we have two areas of liquidity I really think are interesting. And again, this is a pair that's going to do whatever it wants to do. And there ain't nothing we can do about it because it's all Brexit related. And as much as I would love to be able to say, well, it's going to be this, it's going to be that, and this is the reason why, I don't know. I don't understand Brexit, okay? And you've heard me say that before, but I just feel it's important to remind you, because there's new students here, I don't know what Brexit's going to do. I don't know the reactions that's going to be reasonable, what would be expected. You know, I don't know. And if you look at what's been going on in cable, nobody knows, okay? So nobody knows what's going on. So if it's not a day trade, you know, or a scalp, I'm not interested because I don't trust it on a longer term time horizon. So let's break this down into a 15-minute time frame. You can see right now we have essentially nothing really exciting to talk about. We have a little bit of a fair value gap right in here, which would be interesting because if you see this price swing here and then this low, we have relative equal lows. The inability to go higher. I would have liked to seen it trade up through this high here, closing this void. Was unable to do that. Now, it's not a time of day where we would expect it to occur, but if it doesn't want to do that tonight going into London or Frankfurt, this may be an unwind to get down to this fair value gap. So that would take us down into here, right in here to close this fair value gap up. So this one single candle here between these two price points is what I'm looking at. Right there. So this single candle, I want to see price come down and offer sell side delivery. In other words, I want to see movement go down into that candle here at 130.75, 130.70. And once it gets to that price point, then we could essentially say, okay, this has been rebalanced. Then this order block may become more interesting. It may provide some support. Then it may want to run up here and close in this inefficiency. If we run up to this inefficiency first, then I will look for that hourly equal highs to be a factor, which is over here. They would run through that and then break down and maybe see if we want to get down to this fair value gap before Friday's close. They are just simply scenarios that I'm studying. I'm not saying one is greater than the other because, again, I don't like here's scenario A and here's scenario B. I'm just watching it, and I'm giving you scenarios so that way you can study. If it does those things, this is how you should practice it. Again, it's devoid of not knowing, okay, and having conviction. Right now, I have no conviction. In the past, you've seen me with conviction, and I can tell you this is what's going to happen, and it happens. Right now, I have to be honest and tell you I don't really know. So I have to sit on my hands and wait just like you would, okay? There's nothing wrong with that. There's simply nothing wrong with that. You're not going to know everything. You're not going to be on every day. And that's the reason why sometimes I tell you I'm sitting on my hands. Monday and Tuesday, we're sitting on our hands. We're not doing anything. Why? We're waiting for ECB. Okay? Well, ECB's behind us. So what did they leave in their wake? In other words, what in all of the gyrations that took place as a result of ECB this week, what's left? Well, we have, again, fair value gap here, liquidity void here, and we have equal highs up here on the hourly chart. Okay? To me, personally, I'd like to see them drift up there tonight, all through Asia, and then punch it right through these highs, take us up into that hourly equal highs. So run out the buy side liquidity. Then if it wants to sell off, I'd like to see them keep euro dollar consolidated while they do that. That would allow euro pound to decline, which I don't have on my platform to show you right now, but that's the scenario that would take place on that pair. And then work to go lower and maybe trade into this fair value gap and still be a consolidation week. I think that's what we're still working on. It's been doing hardly anything, both euro and cable. So it's really lethargic, it's boring, and it's not an exciting environment to be in right now, unless you're day trading. So I think that's going to be it. Otherwise, I would just be talking about much of nothing. So we'll see what transpires tomorrow. I'll send you a chart by way of Twitter. There's something to look at, to study if I see something. Don't expect it, because I don't expect it personally. And then Friday, the same scenario. If you're 100% against day trading or scalping, then you have an invitation to take a long weekend and just turn off your charts and then check it out when we do our weekly review over the weekend. And until I talk to you next time, wish you good luck and good trading.